Morning, everybody. It's the 13th of September. Welcome to the start of a new week. I'm Joe Neighbour from Signal Centre, and I'll be talking ball this morning. Just me this week. Steve is off on his annual leave, and we'll be back next Monday. So I'll do my best to run through all the charts that I can and the latest of headlines. Hopefully, everybody had a nice weekend. Obviously, a nice win for my beloved Arsenal on Saturday, which was welcome. And of course, the UK have a new tennis champion, which is fantastic news as well. Right, let's get on to markets. The coronavirus pandemic, obviously front and center of all of our lives for what feels like forever, seems to be still very much bubbling under in terms of its impact on markets. And according to experts, it's not over yet. Nearly all people will be either infected or vaccinated by the time the pandemic ends, according to scientists, with warnings of more outbreaks that will close schools and overwhelm hospitals as some economies push ahead with reopenings. The UK are set to come up with their latest rules on or plan for what's going to happen over the winter, and the UK is also prepping a massive booster vaccination program as it plans to scrap mandatory vaccine certificates in England, and Israel is even eyeing a fourth dose. So this is far from over, unfortunately, for now. In terms of what's going on with commodities at the moment, there's been a slow rebound in supplies in the Gulf of Mexico after Hurricane Ida is helping push oil prices up to around $70 a barrel. Come onto the chart shortly. The move defies OPEC's plans to restore output and the Chinese release of reserves, and it could be a sign of things to come as Goldman Sachs sees a significant rally for crude in the autumn. So, from a technical perspective, it's all looking quite good, but we'll come on to that shortly and give an indication of where the key levels are. In the UK, biggest business lobbies warn that higher taxes and in order to fix public finances after the pandemic risk derailing economic growth. That comes from the Confederation of Business Industry Director, the Business Industry Director, in a speech that he's due to put out today. We've got the Germans hitting the polls today. This is a month after, the Germans hitting the polls this month to determine Angela Merkel's successor. So that will be obviously well watched. Stocks in the UK and Europe appear to be pushing a bit higher today, so on the front foot, and we'll see how things look from a technical perspective now. So going to dive into the charts. First up, dollar index with FX markets. So still looking pretty good on this front. We've broken out of this corrected channel, which we were talking about last week in the red lines here. Nice impulsive break higher through that resistance level, and since then we've been holding above, and we're pushing higher again today, up by 0.16% as things stand. For me, it looks as though we're going to continue to push higher towards 93.43 to 93.73. Break above these levels, then for me, we've completed a pretty impressive double bottom pattern on the weekly chart. So down here we've got a bottom, we've got another one here, break above that, then we've got a lot of fresh air to move into on the upside here on dollar index. So looking positive on that front. So flipping over to Euro USD, because it's obviously the flip side of what we see on the dollar index. And as you can see, we broke out of this channel here, as is shown with these this yellow channel. We broke lower and we're moving lower today. We're down by 0.2%. So, big red candle as it stands at the moment. There is obviously a long way to go before the session ends, but we've got some key supports down here at 117.04 and 116.64. If these levels break, then again, further confirmation that I think we've completed this large head and shoulders top pattern on the daily chart, and we can start looking for even lower prices over the medium term, potentially as low as 110.56. So it looks to be a case of selling rallies for me at the moment with regards to Euro USD. Some of the riskier assets have had a bit of a roller coaster ride recently. So Aussie yen, for me, completed a large top pattern here. Number of resistance levels have formed now as a break, which were previous support levels. We saw a really sharp up move in recent days, but it's stalled bang into this cluster of resistance levels and has turned lower. So since then, we've seen 4 consecutive days of selling. We are higher today by around about 0.38%. Obviously, a long way to go on the session. But for me, I would be looking to sell into rallies as I think this is likely to cap the upside, and we can expect a move lower to these swing lows that were posted on the 20th of August at 77.90. Aussie US dollar, similar sort of situation really. Completed a head and shoulders top pattern quite some weeks ago. Now we've got a cluster of resistance levels between sort of 74.05 to 74.50. Prices rallied into these levels and stalled, and we've seen some selling take shape. We did see an attempt to push higher on Friday, but it failed, and we're trading within the body of the candle that was posted on Friday at the moment, despite posting gains of 0.17%. Early in the session, for me, it is a case of selling rallies here still, and I believe a move to these swing lows down at 71.05 is looking likely over the short to medium term. Euro sterling continues to trade lower, so it's stuck within this range or this channel at the moment. Rallied into some resistance around about 86.20 and stalled, and moving lower today. Despite being a green candle as it stands, it is down 0.07% on the session, so we did see a gap lower, but we are pushing a little bit higher off of the lows at the moment. But ultimately, looks like lower prices are to be expected down to this next key support level, 84.50. Looking at cable, that continues to be really choppy. So on Friday, we did get a candle when I was doing this video, poke above this downtrend resistance line, but it got sold into pretty aggressively to form this shooting star candle and backing that up with further losses today. So while we're below this sort of short-term downtrend and this resistance line that's formed here at 138.91, I think we can expect lower prices, to be honest. The breakout didn't occur, which is why I had these lines drawn on. So for me, the likely outcome is for a move lower in the short term down to this support at 135.71. And maybe what we are forming is a bit of a top pattern here as well with sterling against the US dollar. Finally, New Zealand dollar, US dollar. So again, classed as a riskier asset when it comes to FX, still trading within this bearish channel, cluster of resistance between 71.20 to 71.35. Prices are stalling into here. We saw a really big candle move higher on Friday, but then it sold off to close pretty much where it opened, which is pretty negative in my opinion. We are slightly higher today by 0.13%, but for me, I think selling in this kind of band here, or this box that I've got drawn on the chart, would represent pretty good risk reward if you were selling at market, stops above these recent highs, and I think the obvious target is down here at these swing lows, which for me, looking at almost 5 to 1 on the risk reward ratio on that one today. So potentially some opportunities forming on these riskier assets versus the defensive assets like dollar index. So that's it for me on the currency side of things. We'll try and get a little bit more comprehensive once Steve's back, but obviously I want to get through as many charts as I can. Bitcoin's a bit under pressure today, so let's move on to that next. So obviously on the back of this El Salvador news last week, it did stall. We saw this big impulsive or dynamic move lower, as you can see here. Stalled into this kind of 61.8% fib level from these highs that we posted back in the 15th of April down to these lows that we posted on the 22nd of June. We've broken down from this short-term uptrend, and prices have been so far unable to recover back above these levels. So for the moment, it looks like Bitcoin is in corrective mode. How far it will go on the downside is obviously anyone's guess, but I think the next level to try and target is this swing low, or the low that we posted on this big impulsive move lower on the 7th. If we take that out of 42.830, then that could trigger some more selling. In terms of where the major support levels are, it really is back down here at this 30,000 level. So, some considerable price gyrations potentially, could occur here on Bitcoin, which for anybody that's been following Bitcoin for a long period of time will be, I imagine, pretty used to by now. Okay, let's have a look at commodities. So oil, we talked about that moving higher. So looking at this chart here, we're looking at WTI. It's pushed higher into this resistance level here that we've got posted on the chart. It's gapped up today, so there could be potential for this to fill this gap that we've created at 68.55, which is the closing price on Friday. For me, it looks like it's forming a bit of a flag here potentially. If you look back here, obviously we've got a really nice and well-established uptrend. We've got a bit of a consolidation ongoing here. In the short term, we could trade potentially lower. Maybe I'd be looking for a gap fill now to get long. But if we break to the upside above this 70-40 level, these highs posted here, or arguably even here, which is back at the gap, at sort of 69.18, then we could complete this potential flag pattern and then start heading higher. Obviously, those predictions from a number of companies, investment banks, are suggesting that we could see higher prices for oil over the autumn. So be aware of that. I think if we get a nice clean breakout here from a technical perspective, it would back that up as well. So looking quite interesting on the oil front. Looking at gold, this for me still pretty choppy, really. Trading in a corrective channel. I think if we go back, sort of more longer term, we are in a pretty well established uptrend that began back here in 2018. So we've been pushing higher. Yes, we're in a prolonged period of correction lower. We need to get above these two levels here for me in order to start seeing more upside in oil. So 1834 to 1845. If we can break above those levels, then arguably we've completed, a consolidation, and we are going to start heading higher in line with the dominant trend. But for now, while we're below that level, expect more sideways price action. Probably between these levels in the very short term, down to 1758. But if it breaks that, then we could head down towards these key supports down here between 1657 to 1677. Let's have a look at indices on the front foot today, but this is off the back of some pretty aggressive selling that we saw last week. So this is a FTSE 100. So this is the line I'm interested in here from these lows. So the trend line from the lows in the October last year, pushing it up here. We broke that last week quite convincingly, backed it up with further selling, but we are on the front foot today trying to get some of that back. So for me, the interesting level today to watch is a retest of the underside of this trend line, which comes in around about 7,115 today. So I think if people are convinced that this could potentially spark a correction, then there'll be some selling interest maybe around that kind of level. Obviously, if we break above that and then break to these new highs above 7235, then it negates that bearish view, and we can start looking for a continuation higher. But for me, I think a correction is overdue probably on these indices. The level on the downside to watch is 6,992. If that breaks, we're looking down for a move to 6810, which is also going to roughly marry up with this longer term trend line, which actually began at the height of the pandemic back in March last year. So for me, that would be a nice healthy correction down to this kind of level, which will give anybody with cash on the sidelines or looking to employ money to get to work would be probably a little bit more comfortable putting it back into the market at these kind of areas. Below that, we've got the 38.2% fib level from these October lows, which comes in at 6,568. Again, down to these kind of levels, you're still looking at really a healthy correction. But we'll have to wait and see how it trades and what kind of indication we've got and what's going on in the news at that time. DAX, that's on the front foot today. Again, we did see a break of trend last week, and we've seen a retest arguably of the underside of that, and then we've continued to sell lower. We've taken out this low from the 19th of August. It is very shallow. Price action has been very, very narrow for the DAX, which is quite unusual. The break didn't last very long. We're back above it today, but potentially we could see a corrective move down to this next support level, which is at 15,045. Below that, there's a hell of a lot of fresh air for this to move into on the downside. The 38.2% level from the pandemic lows to the most recent highs is down as low as 12,951. So it could be quite a severe sell-off, but ultimately still be quite healthy in the grand scheme of things, given how well the DAX has done. So interesting times ahead, for the equity markets, particularly in Europe. It's not really the same sort of situation in the US. We continue to see the markets well supported here. So this is the NASDAQ, obviously the tech-heavy index in the US. That's had a bit of a correction. We've seen 4 days of consecutive selling. The futures are indicating a push higher at the moment. For me, I'd be looking for a move down to this kind of level here, which comes in at 185. That would be, again, a quite nice move down, really, just to check back to the trend line, find some support on a horizontal basis as well before probably buy a step back in, as we so often see with the US markets. The broader index in the US, the S&P 500, that's actually broken this this longer term trend line, which goes back to these lows here, October last year. So price has been narrowing for quite a considerable period, actually. If you think, this goes back to sort of July, early this year. We've broken the trend line. We've closed below it on Friday. Very muted price action. Sorry, that was Saturday for some reason, but this on Friday we saw a close below it. Trying to retest it today on the futures. Will be interesting to see if this has spooked any participants in the US market and whether or not sellers will dive back in. I've got resistance here at 4,487. Be interested to see how that does actually on an intraday basis. And finally, the Dow, that's also broken a short-term trend line and closing in on support of 34,564. If that breaks, we're looking for a move down to this level, which is 33,737. So some potential warning signs on some of these indices, I think, given that we've seen breaks of trends, which could be backed up with some more selling in the short term. So be a bit careful if you are a dip buyer in some of these markets. I'm not saying you don't want to be buying the dip, because I think at some point you will, but maybe don't be the first person to jump in, because there could be a further clear out if some of these markets pick up on the selling side of things. Okay, gun to the head trade from Friday. This is where I made a call live on the video. Unfortunately, I wasn't successful. I was trying to sell sterling Oz, which didn't work out. So that was a 1R loss or a 51 tick loss. So time to get back on the horse with that today. Do you know what? Having flicked through all these charts that I've just shown, the one that really kind of looked quite interesting to me was the S&P 500. Just because we've seen this break of trend, and at the moment I've got a resistance level at 4487, which is pretty close by, and this is on a daily chart. So I'm going to look at this from an hourly chart perspective and see if I can refine it a little bit. Let me just clean up my charts. So this is the hourly. It's arguably moving lower, as you can see. Clearly the uptrend is pretty good on the long-term side of things, so not getting too carried away there. But I'm going to try and fade it today, so I'm going to sell that there at 4,481. The level I was looking at was 87 on the intraday basis, but I'm going to give it a little bit of room up to there, 4,502. And I'm obviously going to be looking for a fairly chunky sell-off in order to make this look quite nice from a risk-reward perspective. So let's go for 4,438 on the S&P, selling that now with a stop at 4,502. Looking for just a tad over 2R on the S&P 500 today. And again, reason being, on the daily chart, we've seen a break of trend. We are seeing a bit of a push higher on the futures, but I think this will be a key test today for the bulls to see whether or not they've got the energy and the impetus to push this higher, given that there are some warning signs with that break of trend from a technical perspective. Okay, nothing due out on the calendar today of any sort of high impact. We do have numbers throughout the week, which will be certainly more important, particularly inflation and retail sales data coming out from the US. But today looking pretty quiet, so we will see what happens. That's pretty much it from me today. I'll wrap it up there. Be back tomorrow. And until then, everybody trade safe and have a great day. Goodbye.